get this going. Alrighty.
I'm excited for this one. Yep, I see it.
All right, cool. Let's just make sure everything is operating accordingly. Sometimes it can be quite a debacle with the sound.
It sounds okay.
Okay. How is the delay on voices? Are our voices synced up? That's the key.
It's just a little bit behind, but that's expected.
Okay.
So I think it's all set.
All right. All right. Well, welcome everybody. Today you have Harry and Garrett from Trustware on as well. So excited to kind of go into the different things today, themes and markets. Of course, volatility is the market at the moment. The NASDAQ is down 1.7 points. Oh my God. Dow is down 1.4. Like, it's just what we're in. It doesn't look like the market has gotten into complete free fall, but it seems very close. I mean, so I don't know, Harry, Garrett, what do you guys see? I know we were talking about the hash rate before. Talk to me about what your price forecast for Bitcoin is looking like in two scenarios. One, the Iran conflict continues on, and two, normal steady state.
Yeah. So I guess I'll start with, if the conflict continues, I do expect there to be more volatility, honestly. I would imagine we chop around the current price levels we're at right now. To be honest, I don't really see a pullback past 62, right? We kind of bounced off 62, and we've kind of been consolidating or chopping since then. I think 62 is going to be our local bottom for the time being. If, let's say, the conflict does end sooner than later, I would expect a uptrend back towards 80. And I think if we pull out of 80 and we're able to hold above, let's see the supply zone, let's say like 88,000, I think we'd be clear to push back up over 100K. And I originally had this outlook before the war. I think that it's remains the same, in my opinion. Not financial advice, obviously, but I would push my outlook back a couple months at least, right? Ideally, we start to see an uptrend prior to the start of, I'd say, Q3. I think if we are still chopping until the summertime, it'll be pretty hard to kind of make amends and get back up over 100K by then. But that's kind of how I'm looking at it at the moment.
Garrett, how about yourself?
Yeah, I agree mostly in the short term. Like, if you kind of look at the liquidation leverage, it's pretty much all in this like sort of 71 to 69 range. So like I think we probably do chop around here. There's like a couple things in like the macro environment that I think might play a role. For example, if oil prices stay high, that bumps CPI, it's less likely we get rate cuts, which I don't think has been fully priced into the market yet. The other thing I think people should probably watch out for is the private credit story right now. I'm sure you guys have been following this, but like, there's been some cracks, I would say. I mean, not very huge ones, but I mean, Blackstone, BlackRock gated their funds last week, which is never really a good sign. So something to keep an eye on, and just the price of money. People are definitely getting more risk off. I think rates are still pretty low right now. I think there's still a pretty good chance the Fed cuts rates this year. But if money becomes more expensive, it's never usually a good situation for risk assets. But I think in the short term we're choppy. I think macro kind of conflict is honestly good for Bitcoin. But if you look at like kind of like the biggest price action is idiosyncratic, but if you look at short-term price action, what has the biggest effect is monetary policy. So I would just keep an eye on the Fed and the inflation, and I think that'll play a pretty big factor this year.
Got it. All righty, 1 second. So what do you guys see? And I'm just pulling some stuff up while you guys are talking. Mm-hmm. What do you see as like the catalyst behind digital assets? I know you guys have been pretty much, Trustware as a whole is kind of a liquidity layer for movement between chains. So, like, talk to me about what are the conversations you guys are having in the terms of the growth story behind digital assets versus, just price action with respect to like BTC.
Absolutely. Garrett, do you want to take this one?
Yeah, I think there's a couple things like there's like the capital efficiency, which we mentioned last time, Sebastian, like talking about like figure, like kind of traditional underwriting with on-chain execution. I think there's some really interesting like applications to even more sort of bigger like private credit. I met a really and I was just speaking kind of badly about private credit, but I mean at the end of the day people need to borrow money, and it's always going to be a business. I met a really interesting fund. I can't remember the exact name, but they're backed by Blackstone, Apollo, like a couple of pretty big players in the space. And essentially what they do is they create revolving lines of credit for kind of cash flow positive businesses, and they do it all within kind of EVM smart contracts. So I think that there's a lot of like wiring going on in the back end right now for a lot of these financial institutions. And I think it'll start going into private markets. Like we've seen a lot of people talk about like tokenizing equities, tokenizing bonds, stuff like that. I think private markets are ripe for kind of disruption right now when it comes to smart contracts and embedded finance as well. I think that's the main thing on my radar right now.
Do you guys see it as the Genius Act as any like catalyst towards adoption of? Well, I mean, so for those who are listening, the Genius Act has like two primary talking points, which is one is yield on stable coins and just the overall use of stable coins in the U.S. economy and banking systems. And then separately, there's a different part to that, which is perpetuals. And one of the reasons why we don't have perpetuals in the United States is because we just don't have any regulations around that type of contract.
Yep.
So, I think from my perspective, the ability for perpetuals to come into the United States is, I think, what some would consider a bullish like catalyst for Bitcoin and digital assets as a whole, because they're kind of the first ones to get levered, and perpetuals are like the one are like just a leverage play because everyone loves leverage. Right. So it's leading to higher volatility. But do you guys see that as a potential? And what do you think that might do to impact it overall? My price forecast for Bitcoin is still going to 1 million. So we're gonna bet on that. But whether or not it goes down to 20, whether it goes down to 40, 50, whatever, it doesn't really matter. But overall, I think the war itself is showing the use case of Bitcoin, showing the use case of digital assets. But overall, perpetuals, what do you guys think? I know we talked about that a little bit on the last episode, but how do you guys think that will catalyze either price action or just adoption of blockchain-based systems?
Yeah, absolutely. And you kind of alluded to this, but I think it's important to kind of separate two different catalysts here, because you have the institutional catalyst and the enterprise adoption catalyst, but you also have the retail adoption catalyst, right? And that's kind of the perps side of things. Although, of course, institutions and enterprises are going to utilize perps one way or another. But stepping back from that, you also mentioned the staking thing, right? And I think like this is a major catalyst for institutions, given the fact that when banks hold funds, they are going to earn yield on it, right? That's how they operate. And for a stable coin, if you're giving them a stable coin and you're telling them you can't earn yield on this, why would they hold that if they can hold US dollars, get yield on it, right? It's kind of the same principle. So in my eyes, I look at it as like, one, this is a institutional catalyst because now, right, all these banks and whatnots can start issuing yield and get yield on these stable coins. On the other side of things, for the retail side, yes, I would say it is bringing perps to the US is going to be great for adoption for users, right? Because I can't tell you the amount of times I've sent a Hyperliquid link or some other link to a friend and they're like, it's not available in the US, right? And they don't know how to get around it because maybe they're not crypto native, maybe because they're being lazy, whatever the case is. With the Genius Act, that'll obviously reduce that friction there and be able to bring on more people. to some extent, I feel like we've already started to see that. Just because we've seen multiple different platforms kind of integrate Hyperliquid's API directly into their platform, right? If you go on Phantom right now, you have a whole section to trade perps right in your Phantom wallet directly connected to Hyperliquid. And what I think happened is, I actually wrote a tweet about this a while ago as far as like platforms kind of consolidating features. But what I think happened in the last year in 2025 is we saw a lot of meme coin traders and kind of the meme coin retail side of things come over and start trading perps and not really know what was going on or what they were doing, but they were just kind of getting involved because they saw the rest of CT and the rest of the industry kind of utilizing it and, only talking about Hyperliquid for, the past 6 months or whatever. Right. So I do think like it is going to be a big catalyst. I'm interested to see are we going to see 100x perps on Robinhood? Right. Are we going to see 50x perps on your centralized exchange? I don't know yet. I mean, I would assume so. And one thing I do want to add is these centralized exchanges and like Binance did a really good job of positioning this as a retail feature in a retail product, even though despite the complexity, right? And the reason I say that and kind of why you see this is because if you go on Binance and you go try and make a perp, I think you get limited at like a $50,000 size. Right. And that's not nearly enough for any institution to come in and be like, all right, we're going to delta neutral hedge using a perp on Binance. Right. So I think there's two avenues to it. And I think it is going to drive a lot of adoption. And I'm really excited to kind of see how this plays out overall.
Now, maybe this is a question. I just pulled up Hyperliquid, $37 currently, which is down. I mean, considering the market dynamics, Hyperliquid is up 2.5% today. Everything else is down multiple percentages, especially in the equity market. Well, I guess Bitcoin's technically up. Now, the question is, we talked about perpetuals. We talked about the Genius Act. Now, we see this kind of this story or this really nascent technology that we're seeing right now, which is the 5-minute prediction markets. And a lot of people are saying it's actually taking away liquidity from the actual spot or perpetual market, whichever one you want. So, how do you guys see that? Do you think it's a novel instrument that people will continue to use and bet on pretty much anything or within like risk? Or is it a fad and not something that we think is going to continue on?
So I can hop in here real quick. I just want to make a comment and I'll let Garrett kind of talk about this. But one thing that we were talking about this earlier, Bastian, with the prediction model, right? And one thing that I think is needs to be pointed out is these prediction markets are binary markets, right? Meaning there's only a yes or no outcome, meaning you either make money or you lose money at the end of at the expiration, right? And that's like an option, right? It's essentially an option, right? So I think the question also goes back to, do you view options in the traditional financial markets as pulling liquidity away from the actual stock price or the actual underlying asset itself, right? I think that's a fair question to ask as well. But yeah, I just wanted to add that.
Yeah, I mean, I agree. I still think the liquidity for both is pretty light, like for both spot and the options contracts through prediction markets. I mean, me and Harry were kind of talking about this a little bit before, but it's like if people aren't really selling, like if you're buying like a yes or no 15-minute or 5-minute even contract, like you're probably just going to wait till it resolves at the end. So it's a challenge for market makers because you essentially need to, it's essentially all toxic flow. You like, for you to make money as a market maker, like you post a bid and an ask, and there's a spread in between them, and then you make the spread, and then that way, if there's sellers and there's buyers at the same time, you're making money because you buy lower and sell higher. The issue with the short prediction markets is that people are buying and not selling. So it's pretty hard to add liquidity. I think that's why there's still a lot of mispricings, and probably 70% of the poly market bots you see on Twitter are fake. But like, that you can make money. Like there's really ways for people to make money. As far as long term, I think like it's really gambling. Like we could just call it what it is, right? And like I think that's not necessarily a bad business, right? Like people are calling for Pump Fund to fall apart for the longest time. I mean, it's still the what top 5. I mean, it might still be the number 1 revenue generating app in Solana. And I'm bullish on the hype token, to be honest with you. I mean, there's, not to call people up, but there's people like Story Protocol that raised, 3 times as much money and generated like $5 in revenue. And there's Hyperliquid that's generating millions of dollars in revenue and, billions and trillions in volume. And like, it totally flipped the script. So like, I am bullish on Hyperliquid. I'm bullish on the infrastructure. I think long term they end up being sort of like a building block and kind of like the base case for performant infrastructure. For prediction markets, I think it's honestly really new still, and there has to be some sort of new AMM system if they want to scale the liquidity correctly.
Got it. So I think overall it's mainly a retail play at the moment, and there's a lot of mispricing that's going on, and the market makers there's not enough benefit for market makers to step in outside the fact of hedging like a 5-minute hedge. So it seems like what we're saying is that they're not willing to go and buy large quantities and sell large quantities because they haven't figured out how to do a proper hedging outside of it. It's interesting. I know that you guys were talking about a particular company or prediction market company that allows you to create a Claude bot on top of it and trade. Talk to me a little bit about that. Like I haven't played around with the agentic I would say things there. So I'm curious to hear your experience.
Yeah, so we are partnered with a prediction market called Turbine. And we were lucky enough to be kind of early users and beta testers as well. And so what they've developed is they have these 15-minute up and down markets, right? And they have up and down markets on Bitcoin, Solana, Ethereum, and they just launched XRP the other day. So what they built out is they built a custom Claude skill. And if you have Claude code downloaded, you can literally bash the skill. It'll download the relevant packages. And it'll literally prompt you through questions of how you want to set up your bot. It's very seamless. It takes less than 10 minutes to actually set up and deploy the bot. In the final setup steps, it'll literally ask you for your Railway key, and it'll automatically deploy it to Railway for you so it can be running 24/7. It was a fantastic experience as far as setting up the bot, iterating on the bot, and actually like making changes and taking it down from Railway and redeploying it. Very seamless experience. Overall, I'm not a developer, and it was very easy for me to kind of build my own strategy and implement that and launch it and have it run. Your bot is connected to an EOA. So when you set it up, it'll prompt you if you want to generate a wallet or if you have a existing wallet. You essentially provide the private key, and that bot will trade for you 24/7. It has been, I think I'm speaking for both of us, Garrett. It's been very fun to kind of iterate and build out these strategies and kind of see like how the bot actually works. But if anyone's interested in kind of like, deploying a bot or, they just want to try out prediction markets, I highly recommend checking it out. It's called turbine.fi.com. Yeah.
Nice.
Yeah. Turbine.fi and feel free to DM us too, and we can make intros.
Cool. I just got this from looks like someone. So curious on you guys. You probably have some good perspective on this. Poor fellow swapped 50 million to 35K on the ETH mainnet. That is horrendous. Talk about some slippage. So how do you? So I know that we have like auto slippage on our like on all our swaps. Now I'm curious. I'm looking at the transaction here. How do you guys look at? I mean, are you guys just transferred? Do you actually go through? It looks like they went through CowSwap.
Wow,
which is just insane.
Wow.
That's crazy.
So, listen, there's probably a few different ways they screwed this up, and more than likely, this is a manual error, right? I would have to look at this exactly, but I'm assuming they probably didn't have their slippage tolerance set right, and they just got mev'd on the transaction. But this is really interesting.
50 mil. I mean, that's
insane.
That is
That's
actually
absurd.
astounding.
Can you?
I mean, this is the issues with DeFi at the moment. Like that, like in the traditional market, like that just wouldn't happen. Like
Exactly.
you just there's
No.
safeguards against it. Like that should never happen. You know. What were you saying, Garrett?
No, I was just agreeing with you guys. I think it's definitely like there's a reason why these MEV protection products like make so much money and get so much institutional adoption, and that's probably the main one is because execution is a real issue on chain. Like it really is. So especially going through illiquid pairs and like decentralized liquidity. But
and I would add how we're
I-
looking at it. Real quick, I would just add, because you asked how we're looking at it, like at Trustware, we built with the idea of being not an intent layer, but we built with intents in mind, right? And the idea is to not allow this to happen on our system, right? So when you go to make a transaction, you're going to get the most efficient routes, and you're essentially sending an intent to our system, right? And we're processing that intent and then routing that from there. So at the end of the day, if you were to use our system, and if this user did use our system, we would have been able to source the right liquidity from DeFi, and we would have been able to protect them from this slippage problem.
yeah, and I'll even build on top of that one step further. Is there's like kind of this there's this like kind of saying, right, where it's like if you get filled instantly, you paid too much, right? So it's like there's kind of this like this what's the word, like this frontier, right? The efficiency frontier of like how much slippage versus how much time. So our system through our partner Squid Router, which we're super proud to be working with and a design partner with. If you were to route a transaction of that size, we would actually break it up over the series of like an hour to make sure that we weren't like zapping liquidity out of all the pools. And it's very similar to like a TWAP essentially. But like that's really like there's really not enough liquidity. I challenge you to find pools that could handle that much on a daily basis. Maybe curves, honestly, if you were swapping stable coins. Yeah, but like besides that, like that's a lot. I don't know. It'd be pretty difficult, but that's why it's important.
It wasn't even to stable coins; it was to Aave, so it's even harder. Yeah, I mean, like you there's no way you would be able to source $50 million worth of. I don't even know if you looked at the Aave token. I would presume that it would actually be hard to even find $50 million on an exchange.
Oh yeah, definitely.
And you would get crushed on slippage.
Absolutely.
Well, that's what I was gonna say. Like, if you're watching this, like brother that lost the 50 million. If you're watching this, please call up GSR or Falcon X and just go through their OTC desk next time. Like that's what you're supposed to do. Like, I'll help you. Like, just. Don't go through attacks. Like
I was gonna say, I feel like it goes without saying that like we know now at this point, like as crypto native people and just being in the space, we kind of know now like it is not possible to swap 50 million of a liquid like to a stable or whatever on DeFi pools. I think it's instilled like in that we all know like if it's this much money, you have to go to a centralized exchange, you have to go to an OTC desk. But again, there's obviously a lot of or there's still a learning curve, I would say, in crypto.
And that is the other side of our system as well. That's the other part it didn't include. Is for the large orders, we not only space it out and do a TWAP, but we also bring in OTC liquidity through our partner Squid.
It looks like my brother already de-anonymized the guy. He's Titan Builder.
Okay.
So let's just see it. Let's just take a look. I mean, sometimes you look at this and you're like, this is like not even real life. Yeah. So I don't know if there's titanbuilder.eth.
Wow.
So this is they definitely got mev'd and they went directly to Coinbase with it. I mean, you could argue that this guy's gonna get sued. Like this is enough money for you to absolutely get sued, and you will probably be frozen in Coinbase. Like I would be surprised if Coinbase didn't freeze their account.
Yeah,
like that's not commercial. Like commercially, like you can 100% like say that was. I mean, you get something back like out of a legal process. Like there's no, you don't just like get destroyed over that.
yeah.
So I'll be curious if there's going to be a legal proceeding on that one. I'm curious why you sent it to Coinbase, but
yeah, this is really interesting. I'm definitely gonna keep my eye on this. Wow.
Yeah, what do you guys think of? I think the White House has been putting out some crazy videos lately. I don't know if you saw. Oh, we can pull up. What they're actually live. They're actually live.
Oh, God.
I'm actually curious.
Wow.
I don't know. I'm not sure if we can add in audio here. I haven't figured out everything. But what do you guys think about like they've gone through, I don't know where. I think they have a video. There's been just insane propaganda videos. What do you feel about it? Here's the Wii one. I'll play it while we talk. You can't really see that. You can't hear the video, the sound, but it's basically Wii music. What do you guys think about this propaganda train? How do you feel as American? You guys are both Americans, right?
Yeah.
You're in Boston. Yeah. How do you guys feel about this? What does this make you feel? And how do you think the public is taking this?
Yeah. Honestly, I mean, listen, I think this is kind of to some degree expected out of this administration. I think, right, based on the last term, I think this was not the most surprising thing in the world. I'm not a fan of what the White House has been doing on X in the past year and a half. I think it's been like this is absolute nonsense, right? I think this is like it goes to say it's very unprofessional. That's probably not the right word to say here. But I think it's nonsense, right? To some degree, I think they are trying to play into like the brain rot side of things. And like, obviously they're using AI to make all these videos and they're kind of playing into like the recent trends on Twitter and stuff and on social media in general. But at the end of the day, I don't think this is healthy. I don't think the public is happy at all with any of it. I think they're going for views and clicks and they're trying to just get people riled up, honestly. And to some extent, they're doing a good job of that. So, yeah.
What's your take on this?
I mean, I agree with Harry. I honestly think it's kind of disrespectful. I mean, it's really disrespectful to service members. I mean, speaking to both of us, we both have family that serves in the military, and like, it's just like, people are dying. Like Americans are dying, right? Like it's not really a laughing matter. So I think it's kind of disrespectful. I think it's kind of out of touch, honestly, with the general population. Will it stop anytime soon? I don't know. But yeah, I mean, I don't really see what the goal of it is either. Like, are you just trying to like make people mad? Like, is it just rage baiting? Like, that's how it looks. So I don't know what the other goal. Maybe just to make everyone numb to how crazy politics are in this country. Maybe that's it. But I'm not really sure. I wish they'd be a little more respectful though. That's basically my opinion.
Yeah.
I mean, come on. How do you even? There's someone. It's not Trump. There is someone actually going and making this and proposing it. Like,
and getting paid by federal tax dollars. Like the money we spend in taxes is going to that guy's salary to make these memes. Like that's crazy.
Agreed.
But they banned Anthropic, so like it's crazy. Like I don't know.
I mean, when you think about like the United States going to war in Iran, gas prices are going up. I mean, I was honestly, I think I might deploy a website that just shows you the price of oil and the price of gas and just shows you what it actually is going to be, what is actually going to be in 3 weeks or 4 weeks. I agree. I think it's completely out of touch. Like it has. You would think that this has to be some type of chess piece in all of this,
Right.
like to show that it's like we're just like kind of like we don't really care about this. This is just we're doing it because we can. I agree. It's shocking. It's honestly shocking. I don't know if it's good for the country as a whole. But
No.
you would think like he's going through advisors on this stuff, but I don't know.
I don't know.
It's
The
Yeah.
other
one of those
thing,
things
like,
that are just shocking.
even to add on top of that too, right? Like I would never, like, as a country, usually when we go to war, right? Like usually, in theory, there's like somewhat of a reason, right? But like, you know, this is like scary, right? Because like, once again, there's people, our age and younger that are going abroad and risking their lives. And as a country, we should be like, these are our service members. Like, we want to do everything we can to support them. But because it's so politicized now, like they're taking all the heat that should be directed at this administration. You know what I'm saying? So it's like, yeah, I don't think it's good for the country, to be honest with you. But I mean, hopefully at least people can make that division between like the folks that are trying to do the right thing and serve their country and the people that are in power right now due to our political system. So I don't know.
Another news that I don't know if you guys saw the other day, there was a bombs thrown at a protest in front of the mayor's house. And
Yeah.
I'm getting texts from family members like, you actually want to be in NYC right now? Is this the time?
I know.
Is this the time to be in New York? Like it becomes higher and higher. Like I think this all comes down. If we were to imagine the worst case scenario, or not the worst case, but like the next layer, like where you would have riots in the street, it would be some terrorist act that's happening, and it's like, dude, and you're making fun of it, and the second that happens is the second that the entire world turns, and then you're kind of in this weird state. But the one thing I do find it interesting over the past couple weeks is that I didn't really expect the amount of support from other countries to attack Iran. Like Iran went and like attacked everyone around them. And then you have Australia come, and you have France, and you have all these different countries come. I don't think I've seen that, at least in the time I've seen the conflicts. And we haven't really been alive during a real war, like a real war.
Right.
Like a world war. And so like I do find it quite interesting, like watching it and seeing and seeing people deploy troops over here. It seems like the Strait of Hormuz is like the main point at which everyone gets their energy. And like you, as a normal layman who doesn't follow energy as his, day job, it's so interesting to see that like there is that much. Now you know why the Middle East is such a big deal, because the second they shut that down, everybody started freaking out. Like It was like shocking. Like I was like, I never knew that this was the energy in this world is so concentrated in one area. I don't know if you guys felt the same, but that's how I felt.
No, I definitely felt the same way. I mean, and I feel like this is a reoccurring theme, right? You kind of saw the same thing happen when Russia invaded Ukraine. It was kind of the same thing, right? Because Europe's getting so much of their energy from Russia. So I think this is a reoccurring theme, and this kind of goes along with kind of the trajectory of, the human race at the end of the day, right? Energy is not unlimited. Oil is not unlimited. And I think, everyone knows that now, right? That's not a secret. That's not right. That's common knowledge. And I think every country is aware of it. And every country is, I think, very, very adamant about their oil supplies and kind of their flow of it. And for some of these countries, right, it is their main economy mover. Russia's whole economy is oil. Same. I don't know about Iran. I don't want to say the same for Iran, but obviously the Strait is kind of the kicker here. So yeah.
Yeah, insane. Meanwhile, I'm getting pinged. This is the guy, Titan Builder. His Titan Builder XYZ is the one that completely sandwiched this guy and said he got 44 million bucks. The scary thing is you have guys like Arkham who will go and de-anonymize you the second it happens.
Yep.
Like you don't get through this like within 5 minutes. Within
Yep.
5 minutes you get cooked.
Doxed right away. Yeah.
Completely doxed. Like dude, like everybody's gonna be looking at you and be like, first of all, we know you have money, and second of all, what the hell just happened? I'm curious.
Nope.
What is Titan Builder at XYZ? Because this is,
Let's look at it.
it's a neutral block builder on Ethereum. Like very clearly, like there are so many mevs out there. So like this guy obviously has some type of something that is going on.
Yeah.
We run multiple bundle merging algorithms in parallel through proprietary high performance infrastructure. We do not use bundles for anything other than building competitive blocks. To avoid any conflict of interest, we don't do any searching on Ethereum. Dude, our builder is neutral. You just meved a guy $44 million.
Oh my god.
Wow.
That's insane.
I mean, it's actually funny. Like they're like, oh, we're a neutral block builder, and they just cook a guy. Maybe that's all they were looking to do at one point. Wow. Anyways.
Yeah, maybe they should just update their website and be like, yeah, we're just meving people for millions of dollars.
Wow. Incredible. Have you guys I'm just going through. What are some of the headlines that you guys have been seeing? I mean, we're all kind of in the market asking people what they're looking for. What are some of the exciting things that you guys have seen? And how are you guys building towards it?
Yeah, I think one of the most common recurring themes we saw when we were at ETH Denver is vaults. I think everyone is putting a lot of everyone's focusing on vaults right now, right? And they do have a lot of use cases, and it makes sense for a majority of these DeFi protocols and dApps, right? So for example, right, if you were to go and say you want to deploy capital and run the Athena Pendle Aave loop, right? That would be a lot of manual steps, right? You have to keep re-looping that position. You have to keep taking out loans on that collateral, and you have to keep looping it. And you have to also stay in touch with it. You have to make sure those rates don't flip on you, right? If you were to use a vault, you wouldn't have to do any of that. That vault would do it for you, automate the liquidations, automate the looping for you, all of that, right? And I think that's a really strong use case moving towards not just retail adoption, but also institutional adoption, because just being able to give a product that automates this whole process for you and really kind of back to our core thesis of removing the complexity from blockchain, right? I just think it opens the doors for a lot more capital inflows and a lot more liquidity. So I think, we're putting a very important, view on vaults. We are building out to support vaults, and to some extent we already do support vaults. And what that looks like is essentially we'd be able to allow any asset on any chain to be directly deposited into a vault on any chain with any assets as the holding assets, right? So if you have a vault on native Ethereum and let's say it's only taking deposits in USDC on base, well, if you're using Trustware, you can deposit with native Bitcoin, and we'll route it directly into that vault for you. There's a lot of different use cases with vaults. I'm really excited to see kind of how they progress over the next year or so, especially with a lot of the planned like EIP standards that will be coming out as far as like permission-based roles and that sort of thing. So I'm really excited for how they develop over the next year.
Mm-hmm. I would say the other big thing, I was talking with a protocol yesterday called Amalgam, and fixed rate borrowing and yield in DeFi is really like having a moment right now. I think it really started with Pendle, and Pendle's been around for a while. But like there's demand for fixed yields. And it's coming from a lot of different places. It's coming from compute. We were looking at Nodes Garden yesterday. They're essentially like, if you have, and I'm going to mess up the H200 or like, the chips, the computer chips for running AI models or whatever, you can rent those out for crypto and get paid like a pretty compelling, kind of return. So I think like that's a really interesting. It's the same as mining, right? At the end of the day, but it's really interesting what people are doing with fixed yield right now. I think that there's a lot of opportunity when it comes to that because and there's risk, right? Like if you're gonna do a fixed yield of 7% versus a CD at 4%, like there's a reason it's almost twice as good. It's because twice as risky. But I mean, people like risk. I mean, we're in a risk on market. We have been, well, maybe a little less now, but we have been for the past like 5 years, right? So I think that that's really exciting. And my big hope with vaults is like liquidity pools like are a lot easier for people to use because I think like, I was like all gung ho about using QD swap the first time to provide liquidity. Then I was like, what? I need to sell half my token like for the stable coin and then like, deposit them both at the same time. And like, there's a permanent loss and all these like kind of things. And so I think if we could make, because we talk about a lot like democratizing in crypto, but we don't really talk about democratizing the liquidity. It's still like a few people that really control the liquidity. So I think that's a really exciting potential future that we get out of vaults too.
So how do you guys? You were talking about yield and higher risk and higher risk vaults. I think the last cycle we saw a little bit about how yield can attract a lot of capital, and then once it falls apart, like the whole system gets destroyed. And that kind of auto looping and things like that on the vaults. Where are you guys seeing the most flow where the yield is going? Like, do we have another scenario here where you have, once you hit critical mass, you have a bad actor of some sort
Yeah.
like this is where I see institutional capital kind of coming and saying, taking a pause, like, okay, you might get 10%, right? What is the 10% on? And it does seem like we're seeing more and more where you just have people wrapping these kind of vault mechanisms. And the question is like, where does it, has this been tested? That's the question.
No.
Like it seems like a very primitive technology that people are putting millions and millions into. And I mean, I guess that as much as it's a question, I think it's just a concern that I don't think people are recognizing that this, by abstracting away the complexity of these things, you're almost reducing the, like, you're almost making it seem like it's safe, but in the end, there's so many risks to it. And I would worry that for the space as a whole, that somebody offering, 15, 20, some of these vaults, Polymarket vault is 511, whether or not it's good or not, that we ended up, losing a lot of money. But have you guys seen any bad things, any good things, or like, ones that you're like worried about, or there's tools that like are monitoring this? Like what's...
Yes. I have a couple of thoughts on this quickly. So the first one, I would argue that like the kind of credit event like already happened this cycle with Athena and Binance and what happened on 1010. Me and Harry like modeled this out in like June of last year, and we're like, all this risk is hypothecated. It's all dependent on this tiny little liquidity pool right here. And someone saw it and exploited it, and it caused what, like a 20% red candle in the market that day or whatever it was. So I think that's part of it. There's a couple of different approaches. Like I think, so the first thing is ratings agencies, right? Like I hope it's public. Like, and those folks, like they did a rating for, what's it called? MicroStrategy. Wow, I couldn't even, or just strategy now. Right. They did a rating for Athena, right? Like they're starting to do these things for the bigger DeFi protocols, like from really respected kind of ratings agencies. I think that's the first step. And then also just like if you can't explain the yield, like, and there was a lot, especially Steam or Stream Finance. I always mess it up. But they were essentially running a tokenized hedge fund. They basically let people just like manage different parts of the portfolio, and they called them risk curators, which is like, yeah, like that's okay, but like people need to understand that yield isn't guaranteed if you're essentially letting someone gamble with your money. You look at the other side, you look at someone like Zirkit, right, where they're literally just loaning money to like FalconX's hedge fund, and they're letting people like contribute stable coins to that in order to like help loan money to them. Like that's an amazing use case, right? Like that's a really easy, like I won't say low risk because you're still letting a hedge fund borrow your money, but much lower risk than some of these really exotic kind of DeFi plays. But I think we'll end up probably somewhere in the middle where like ratings agencies step more into it, and then people are just more aware of the risks. And then we probably need to build out some risk tooling that's
definitely
more suited for a kind of crypto market. Yeah.
Yeah, I know. On IndexFi, there was basically the top 5 yield bearing tokens on Solana, which is ONYC, Syrup USDC, Prime, PayFi, and Carrot, and these are all yield bearing. I do think that there's a couple different risks. Actually, my background is in credit ratings, which is interesting enough. They are rating, I believe, treasury vaults. So Centrifuge has like a AAA rated vault. The interesting thing, though, it's not necessarily rated on the safety of the smart contract, because I think the honoring of these funds are actually not based on the smart contract. It's actually based on
that is
I
coming.
was just about to bring that up.
I promise you that's coming. I can't say who and through what collaboration, but that there will probably be an announcement this year about that. That is the biggest gap right now, for sure. But you'll definitely see ratings agencies start pairing up with auditors and working together to kind of address that part. Absolutely.
Yeah, one of the things that we were working with DFlow actually was they are doing KYC flows for permission pools, specifically with prediction markets. So I think that's something that is likely going to increase in like just the use case of it. I think it's very nascent because tokenized equities are so small. But the permissioned DeFi pools with KYC front ends, it does make a lot of sense. Like it makes a lot of sense for the ability to access DeFi liquidity. Makes sense for people to give liquidity and not have exposure to any of these regulatory concerns. And then it also allows people to trade securities and regulations on top of that. So I think that's super cool. And I do agree. And then the other thing too on these vaults is insurance. But of course, underwriting smart contract or just insurance on yield bearing products, which arguably are securities and shouldn't be allowed in the United States unless they're registered. Then you probably won't see that. I think one of the insurance protocols back in Celsius's time, which was insuring the DPEG of Terra Luna, went under very quickly. Like it was like the fastest. Like I think vaults are great, and I think that there are some proven things, but there are still hacks all the time on major protocols. Like I don't know who are the people that are really, I worry for the retail consumer. But I think we're almost at time. I think the interesting thing, and in fact, we haven't integrated Trustware, but we probably should. Is the ability, like for example, I'm curious on that prediction market clawbot, because we have on every episode of our kind of time here, we make a stack with AI. So I'm curious, are the way that we've been doing this, and we have a backtesting module for everything, is basically you just like chat with it and ask what it is. And what our thesis is that if you take low market cap coins, so if you say like give us a stack of tokens that are that are the highest performing in the last 24 hours and between 250K market cap and 2 million. The thesis behind this play, we've been doing this for about 30 days now, is that you, by diversifying your risk between low cap tokens that are on chain, you get venture like returns. So like you might have one that goes 10x, you might have one go, minus 50, et cetera, et cetera. But this is what we've been doing pretty much for the past 30 days. The returns are 8 to 10%. The drawdowns are, we're still back testing what stop loss we need to put on, but it seems to be doing pretty well. Now you have all these different tokens. They're usually new. Oh, look at that claw vault. Interesting.
Interesting.
You might have a little. You might have. There might be some vaulting solutions with claw vaults. We need this AI cohort. Actually, one of the things that I want to do as well is create a skill that allows like my Clawbot to essentially go and just do this at 4 p.m. every day, so that we don't have to do it.
Yeah.
So that's what we're doing here. We'll create it. We'll see what the performance is over time. We'll buy a little bit of this.
This is really cool.
But I do think that over time, this diversification of risk, the insurance, the rating, it all is kind of going towards the traditional finance system, right?
Yeah.
So
Yep.
That's kind of where we're at, right?
I mean, I feel like that's where we've been headed the past 3 years, and the cyberpunk people don't like to hear that. But at the end of the day, like, adoption of this industry is going to look like TradFi. Like, this industry one day is going to look like everything you're used to as far as Venmo and your actual bank account and Apple Pay and Cash App, right? And I think, as we further build out towards that, I think it's really going to come to light, and I think a lot of people are going to realize that. But even when you look at go look at the Polymarket iOS app. Like that, there is no crypto mention at all anywhere. It is very sleek. It is built for the Web 2 native gambler, right? Like, and I think a lot of crypto platforms are gonna really double down on that.
Well, I'll tell you what, we have stack wars going on right now. Basically, these are like people's portfolios PvPing against one another.
Okay.
With the university, with the University of Buffalo, Taib's old alma mater.
Look at that.
And crazy enough, what is the winner, or what is currently winning, is Microsoft stock.
Wow.
And it just shows you
That,
somebody goes and it was like, screw everything that I see on chain. I'm just gonna put Microsoft stock because it's gonna beat them all.
There you go.
So arguably, I think you're seeing that narrative of less of the on-chain world and more of the entire world itself versus
Absolutely. I also one thing to add to this is I saw the other day there was a stat. I forget what day it was. Maybe it was Sunday night. There was only 2 assets on Hyperliquid with over $1 billion in 24-hour trading volume: Bitcoin and oil. That's it.
Mm-hmm.
That's a telltale sign right there, right?
Yeah, I think if we just go, it might be, somebody was comparing the Coinbase volume of oil futures versus Hyperliquid.
Oh my god!
And it was something like,
yeah.
I don't know if you guys have that. You send it over.
I saw one trader on Liquid, which uses Hyperliquid, did more volume than the entire volume on Coinbase for oil futures. One trader.
I'm trying to pull it up because it's actually shocking. It's actually shocking. Like when you talk about here it is. Hyperliquid is 991 million and Coinbase is only 75K.
Insanity.
Dude, how do you buy a Coinbase stock? How do you do that?
That's a good question.
Well, it just shows you the Coinbase customer is not interested in anyone other than crypto, and and you're seeing that Hyperliquid, and one of the other theses with Hyperliquid is that crypto native people that didn't want to take their money off chain, guys that Bitcoin whales, huge ETH whales. They have no way to get exposure to anything off chain, because if you move it off of chain, you have to get into the traditional banking system, which is to move $1 billion to the traditional banking system from crypto is like it's like almost not even possible.
Has
like
anyone done it?
The only people that I know that have done that, like in publicly, is bankrupt estates, and they spent $400 million. I think probably close to $1 billion in lawyer fees.
Yeah.
So, like it just kind of shows you, like, I think for perpetual, like, this shows you what's going to happen. I think this is honestly just, it literally is showing you what is going to happen to freaking Coinbase. Like, I don't know anywhere other, like, I haven't met a single person that uses Coinbase is like, oh yeah, I really enjoy this. Or I'm there anything to crypto. You know, but anyway, so we're coming up on time. I don't know if you guys have anything else that you want to bring up, or any interesting news. Anything else, guys?
I don't know. The only other cool thing or funny thing I guess I saw in the industry recently is I retweeted it too. I saw like I don't know what it was. Pancake implemented a stable swap feature on their platform, and they legitimately just copied Curve's code. So Curve like quote tweeted at them. And they were like, "Hey, it looks like you just copied our code. Like, this is against our terms of service, but if you still want to work with us, just reach out." And I don't know. I guess they're working together, but I just thought that was funny, and I'm glad they took that approach, because I think in the past, like, the DeFi community has been kind of not parasitic, but definitely ones to like hop on one side and kind of attack another side, right? So it was cool to kind of see like these two massive players in our industry kind of be like, all right, let's actually work together. Like, let's not make this a drama, and let's not make this a whole scene like that Aave just had, right? Yeah.
Awesome. I guess the only thing. Yeah, my parting words is the S&P is down 1.5% today. Do not tune out. Like, seriously, there's going to be some crazy opportunities in the near future. So pay attention. This is not a time to, if you're a trader, start making some stacks, because this is a really good time to start DCing.
And start making some stacks. Yeah, love it. Awesome. Well, with that, everybody, thank you for joining us. Thank you, Harry and Garrett, for the time. I think we certainly have, I mean, what looks like an absolute cliff here. Hopefully not, but doesn't look great. But I mean, as the war either closes or rages on, whichever one, I think we all agree that there is growth in the space, both the digital asset space, AI, and the implementation of both, right? So there's certainly opportunities all over the place, and we're happy to be building in this time. So all right, well, guys, thanks for joining, and for everybody else, I will see you all tomorrow. See you guys.
Pleasure, Sebastian. Thank you, man.
Thanks, Sebastian.
All right,
appreciate it.